G'day and welcome to the Off-Chain Podcast. Don here with you. Our guest today is James Toledano, COO at Unity Wallet, formerly Savl, a self-custodial crypto wallet combining industry-leading functionality and global encryption. There's the search for crypto mass adoption really relies or comes down to, can your proverbial grandma use the technology? It's got to have financial security, transaction privacy, seamless UX UI that's easy to use or kind of seeps into the background. It's going to be easy. James is passionate about data science, a serial entrepreneur, experience across many verticals, and we're really excited to have James on the show to talk about wallets, mass adoption, and what is the roadblock for crypto becoming or hitting the meta in 2025. Let's dive in. How'd you end up in crypto? What's your origin story there?
Yeah, so my origin story is I was living in New York, and I was actually living on Wall Street, very close to Wall Street, during the financial crash, during the whole Occupy Wall Street thing.
Yep.
And I've always been in the tech field, and I started to hear about Satoshi Nakamoto and this thing called Bitcoin. I saw all the protests and the protesters, and obviously they're kind of calling for the heads of all the bankers, and then I saw in Greece and in Iceland the run on the banks and people just trying to get their savings out or the money out their banks, and they couldn't do it. And we all operated on the assumption that we keep our money safe in the banks, and we could just get it whenever we want, right? And turns out that wasn't the case. And so this thing called Bitcoin, I read the white paper, and it seemed like such a great idea. And so I kind of invested, not enough, which was really stupid because I think at one point it was like 4 cents. So I could have literally bought, $1,000 worth and, be worth a few $100 million. But still I bought into it, and it's done obviously incredibly well over time. I probably sold half of it too early, but I did well from that. But that's how I got into it. And but I was never in the industry. I was just an investor in it, and I focused purely on Bitcoin. And then I got involved in the industry really in 2018, and then we launched Unity Wallet. So the business of Unity Wallet was originally called Savl. That was established in 2018. And then we launched the product in 2020. And then we've been working on that in earnest for the past 4 or 5 years now. Yeah, that's how I got into it.
What is that? What is Unity Wallet? How did you decide to do this?
Yeah, so Unity Wallets, I think, so really the kind of origins of Unity Wallet and why it was born was that in the beginning, crypto, it was perceived as very technical, and it kind of was. I mean, if you weren't that much of a technical person, just simply transacting, buying crypto, on an exchange and then sending it somewhere to keep it safe was very nerve-wracking, because if you make a mistake, it's gone forever. So there were all these technical barriers and technical hurdles, and challenges and reputational issues. And so we really wanted to create a business that overcame that through user interface, by creating a product that was incredibly easy to use, highly intuitive, and made it, we've kind of minimalized mistakes by educating users. If you're sending X currency, are you sending it on the right blockchain? Because obviously now you've got Tron, you've got Ethereum, you've got, all these other blockchains. You've got on Bitcoin, you've got the Lightning Network, you've got the regular network. And so people think you're just sending it and that's it. And there was no one saying, hold on, wait a minute, just make sure you've got the specifics right before you send it. And so we help people to do that so they can minimize mistakes. And sometimes we also advise people, if you're sending a lot of crypto, maybe send a small amount first, make sure it gets to the right destination.
Yeah.
So there's a lot of education involved in what we do, and we're always trying to improve the UI and make the process smoother. And because we're a decentralized platform, we're not centralized. The goal really is to make it feel completely centralized, even though it's a bunch of different pieces coming together within one framework. It's not centralized. Obviously, we're a self-custodial wallet, and that's a whole other thing as well. It's educating people between, what the difference is between custodian and self-custodial, why it's so important. And in the same way that there was a run on the banks in 2008, obviously we've seen with things like FTX, there could be a run on centralized exchanges and people could potentially lose all their money, which is why self-custodial is so important, because it makes you the bank, it makes you the customer, and you also have the keys to the vault. So if there's a run on the banks or there's liquidity issues or market goes down, no one can stop you accessing your money. No one can take it from you. It's yours no matter what. And so I think self-custodial has really kind of just been growing rapidly because of this. There's obviously a role for centralized exchanges. That's not going to go away, I don't think. But what's very important is that you move any of the assets you've got from a centralized exchange to a self-custodial wallet as soon as you can, just to keep it safe. Yeah. So this year, that's really how the whole thing was born, just to make it easy, to make it grandma-proof.
Yeah. Well, I mean, there's some risks for the proverbial grandma though with self-custody. How are you kind of thinking about those? Obviously, you said you got the warnings. What other kinds of things? Because it seems to me that's one of the big barriers to what we might think about as mass adoption is self-custody is obviously, like self-evidently excellent, except that if you don't know what you're doing, it could be terrible.
Yeah, so the one peril with self-custodial wallets, obviously, is that it emphasizes personal responsibility, right? So
no manager.
There's no, So for example, if you're using a central exchange and you make a mistake, you can speak to a support person and they might be able to recover your crypto somewhere, right? If you make a mistake on a self-custodial wallet, it's obviously a much bigger challenge. But the biggest challenge, although I think it's a plus, because I think in our societies we make things way too easy for people, so they don't have to think about what to do anymore. But really, with a self-custodial wallet, the only thing you really need to be on top of is your recovery phrase, right? So a lot of these wallets give 12-word recovery phrases. We do 24-word recovery phrases, so we can be completely robust. And then you basically get these 24 random words like, I don't know, car, house, trash, kangaroo, whatever it is, and you've got to store those words somewhere very safe. And that doesn't mean taking a screenshot and keeping it in the cloud. That's one of the stupidest things you can do. But it means literally writing them down, putting them in a safe deposit box, putting them in multiple places where you remember where they are. And so if you've got a self-custodial wallet on your phone and you lose your phone or it gets stolen, you don't have to panic, because all you do on your new phone is you re-download Unity Wallet, and then you put in those 24 words in the order it asks you to, and everything's restored. Now, obviously, when we're talking about grandmas and grandpas, memory might be an issue, right? So hopefully they're relying on their grandchildren, or they've got a safety deposit box or a safe. But that's really the only inherent risk, because self-custodial, it's far less likely for hackers to be able to access your stuff versus a centralized exchange. If a hacker gets into a centralized exchange, the fallout from that isn't just for one customer, it's for thousands. Yeah.
So how did you go from being a fairly early investor in Bitcoin or buyer of Bitcoin to building a wallet? What was that process like? How did you're living on Wall Street already? You went through, some volatility there, literally on your doorstep. How do you go from that to, we should actually build something?
Yeah, well, really, so I came into the business after the original founders decided kind of what they wanted to do with it. But I had experience with decentralized technologies prior to that because I was working in the digital music business, and I was actually helping combat digital piracy through BitTorrent. And BitTorrent was a decentralized technology, and it was the power of many, helping people get really fast downloads. And although it's different, it's the same kind of, ethos. It's decentralized. It's kind of very libertarian. It was totally unregulated, although now our space, thankfully, is becoming more and more regulated. But I was really brought into the business to help grow it, to help market the business really, and to help operate the business. And so I've been doing that for the past 3 or so years, but it's something I really wanted to do. I just saw the space grow and grow. And I fundamentally, I would probably call, I probably call myself a Bitcoin maximalist. Personally, I focus mainly on Bitcoin. I have some other investments in other coins as well, but I'm a big proponent of Bitcoin. I think it's been wonderful for a lot of people, and it's been, aside from crypto winters, it's been rock solid for 15 years now, right? So it's very hard for the naysayers to keep on being negative about it. But yeah, I don't know if that answers the question. But
yeah, I think so. Yeah, for me, I came into the scene around 2016, 17, just when DAO was coming out and Ethereum and a few of the real altcoins that were trying to be alternatives or trying to, I guess, take the kind of the Bitcoin ethos and make it, expand upon it. And so for me, I was like, okay, Bitcoin is fantastic, and obviously it's the big brother, but everything else is going to be great. And, the future of money is Ethereum or things like that, EVM style. But I think, as you say, Bitcoin really is proving over and over again or over time to be not just the big dog, but actually the main show.
And what's fascinating about that is like Bitcoin, obviously it's like, I think nearly 60% of the entire market cap of DeFi. And it kind of buoys the entire vertical. But actually there's no, in terms of use case, it's not that great, right? I mean, it's really slow to transact with. So you can't really use it for day-to-day transactions. But what it is, it's a fantastic store of value. And like you said, the other coins, like Ethereum, obviously introduced smart contracts and actually has utility, Ripple, super fast payments, Tron network, super fast payments. So I think it's fascinating. And obviously Bitcoin, as far as I know, it's the only one recognized by the Securities and Exchange Commission in the US as a digital commodity, right? It's the only true digital commodity there is. But yeah, the other ones that have very robust use cases are also very interesting. So I'm also focused on Ethereum, Solana, and Ripple. Obviously, has been having a pretty good time recently. So yeah,
that's been the biggest surprise for me. Actually, it's been Ripple. Ripple's ascendancy has been, actually unbelievable. I would not have believed it if you'd said that just a couple of years ago. That it will be doing as well as it's doing. So being a self-proclaimed Bitcoin maxi, what are you thinking about? I mean, the current political winds have changed a little bit, and talk of a Bitcoin strategic reserve in many countries, and certainly companies have been taking that on for a little while now. What do you think of the, is that the dream, or, is it going to be a particular, do you hold hope that this is actually going to be a net positive for Bitcoin?
Yes, I mean, I think obviously the one great use case right now is obviously El Salvador, right? With I think his name is it President Bukele. They own around, I think, 6,050 bitcoins, and I think it represents something like 10 or 11% of their GDP, and they've got this like $1.4 billion IMF loan. And they've made about $335 million in profit from Bitcoin. So that's going to clear nearly a third of their IMF debt. And so if the predictions are right, there's one guy, I can't remember his name, it's Jeffrey, someone at Standard Chartered. He was the only guy who accurately predicted that Bitcoin would get to 100 grand. And he's saying it's going to get to 200 grand this year in 2025. If he's correct, then that, drastically changes the fortunes of a country like El Salvador, which has a GDP of $32 billion. That's it, right? So for small countries, as a treasury reserve asset, I think it can be a wonderful thing. The flip side of that with crypto, as much as I'm a proponent, is there's not much stopping these things falling, right? So the inherent risks are massive. And I know countries like Czechoslovakia now. Is it Czechoslovakia? Well, other European countries are kind of on the eastern side are looking more heavily into this, and obviously the US want very much to kind of look at Bitcoin as a strategic reserve asset. The problem they're going to have there is, as pro crypto as Donald Trump is, he doesn't control the Federal Reserve and he can't just tell them what to do. But, they're a $27 trillion economy. And if they buy enough Bitcoin and the value goes up enough, that could increase their GDP by, 5 to 10% in quite a short amount of time, take them past $30 trillion, which would double the size of their economy versus China. So I think it's a good thing. I think it's a good thing for nation states to have investments in Bitcoin. Obviously, the fear is there's only 21 million. We're going to probably end up minting the last Bitcoin around 2040, the way things are going. And that scarcity obviously means there'll be less supply, prices will probably go up. It might make it harder for the ordinary man or woman to get their hands on some Bitcoin. But then also, aside from governments, I mean, you look at what Michael Saylor's been doing at MicroStrategy and using Bitcoin to boost the fortunes of that company. And that's had a massive knock-on effect on their share price. Michael personally has become, a multi-billionaire because he has obviously plenty of Bitcoin himself.
He weathered some storms to get there.
He weathered some storms, yeah, but he's really stuck by it. I mean, he's kind of made some of his claims are outlandish, like, Bitcoin is going to go to $2.5 million. Maybe he's right, but I think it's going to take a long time, right? You've got pension funds. I think even UK pension funds have been buying into Bitcoin. And other countries this is happening in. So it's like the time has long passed for people to say Bitcoin's a Ponzi scheme, it's a scam. Like, you just can't say that anymore when you've got, the world's largest asset manager, BlackRock, with 11 trillion under management now, or maybe even more, launching ETF products. Same with Wisdom Tree and other companies. Bitcoin has a lot of credibility, and I think it's definitely here to stay. And go back to your original question, I think the strategic reserve thing is, you have to have it as part of the mix. I mean, how can you avoid it? Yeah,
is that going to be a good thing? So, say governments all around the world start, 100 plus governments start buying up Bitcoin. You said, that the risk then is, because of the scarcity and the limited supply, that people might, it restricts access to the everyday user or investor. And then what becomes the utility or the usefulness of having it.
Yeah. So one of the issues is that in the US now, they want to become the crypto capital of the world, right? And what that probably means is not just leading the way in regulations, it probably means also owning the most amount of crypto. And so yeah, there's a risk that governments might buy too much of the asset. But it's decentralized and it's very libertarian in its ethos. So you can't stop governments doing that. But at the same time, there's always going to be inflows and outflows. There's always going to be supply demand. There's always going to be trades going on. So even if governments buy large amounts, people are still going to be able to get their hands on it. But I guess one of the issues then comes down to the same thing it happens in regular markets with equities. If you have, one activist investor, Carl Icahn type, or Bill Ackman type, who buys too many shares in a company, they get to have too much say over its future.
Yeah.
But then again, the difference is, Bitcoin is decentralized. There's no board of directors. There's no shareholders.
What about hashing power? What if they, is there any potential of the proverbial 51%? USA says we want to be the number one, control the...
Yeah, I mean, there's some risks there. There's also risks if they start to control, the whole mining endeavor as well. There are some risks to that, but beyond, I don't know. I haven't given it maybe enough thought. It's something I should be thinking about a lot more, especially, we know we've got a very pro-crypto government in the US and their plan is to buy a lot of this stuff. So it's going to be interesting to see how it plays out. But I need to inform myself a bit more to give you a better answer.
Yeah, sure. I mean, I remember, again, back in 2017, the thinking was, the general wisdom was, oh, just wait till retail comes in. And then retail comes in and kind of wrecks the game a bit. Or just wait till institutional investors come in and then institutional investors come in. Or just wait till the governments get involved and then, China bans it and then brings it back in and then bans it and then brings it back in. And it just smashes the market over and over again. All these things that we wish for, when they actually happen, we hadn't been careful about what we wished for, perhaps. And now we're thinking, and then the last couple of years has been, I can't wait till the USA finally come on board and become the crypto capital of the world. And now they want to. And so I'm just wondering, what are the unforeseen side effects? The
unforeseen consequences. And it's like you say, beware what you wish for. But then if you talk about the ETF stuff, right, that's only been positive in terms of price movements.
Yep. And we're hoping for that.
Yeah, and then also, the more governments back it, the more institutional investors are going to get involved. The more confidence there is, the more confidence consumers have at buying into it as well. So most of me thinks it's a good thing, but then there are other Bitcoin maximalists who preferred it when it was really just people who knew about Bitcoin from a technical perspective who were involved, and there was no so-called dumb money in the system like speculators. But really, we're all speculators, right? I mean, everyone in crypto is a speculator at this point, I believe. It was an investment. Bitcoin's been an investment, but most of it's speculation. Yeah.
Where would you say we are then in the, you mentioned that 2024 being the year crypto grew up with ETFs, institutional adoption and now even, governmental adoption. What do you think we are in the kind of the macro, if you zoom right out, the onboarding ordinary people into crypto, or, really hitting the meta in terms of people say, well, it's not just that fringe or risky or scammy or meme coinery, gambling.
Yeah.
The proverbial grandma gets on board, not as a, 1% of their investment as a hedge against whatever, but actually because it's just a mainstream thing to do.
So we are seeing a lot more onboarding of what you might call regular people onto our platform. And that's happening a lot, I think, obviously because of media coverage. obviously one of the fights we have to always contend with is people talking about, it's just used for money laundering and sanctions busting, and it's all criminals. And but if you actually compare the percentage of how Bitcoin might, or how crypto might be used for illicit purposes, to how criminal organizations are using traditional finance, it pales in comparison. It's
Sure.
I haven't got the exact numbers, but it's single digit percentage. It's tiny. And I think the people are getting more and more comfortable with decentralization. I think, not to go too political, but we've seen certainly over the pandemic and everything that happened, there's just this mass distrust in public institutions and banks. And, you saw all these, you saw the financial collapse, and there was really no criminal consequences for any of the heads of these banks. People just became very untrustworthy, and they started to look to the alternate economy, which is decentralized finance, to invest. And I think, whereas before people maybe put 2% of their net worth into crypto, then it's gone up to 5% and 10% and 20%. And now with ETFs, obviously, so the great thing about the ETF products is they're incredibly low fee. There's no technical barriers. So for people who still perceive, there to be too many technical barriers to transacting in crypto, they can just get ETFs, a spot ETF in America and now Canada. They can actually they don't own the asset, but the asset house they're buying it from owns the underlying asset. Yeah. And they can get involved that way. And then from there, they might actually want to own actual crypto in a wallet, in the same way that some people that buy gold ETFs are like, you know what, I'm going to go and buy some gold bars and keep them in my safety deposit box. But it's education, and it's it's still largely male dominated, but that's changing. Women are getting much more involved in crypto, which I think is great. Oh. It's becoming more mainstream, and everyone I know in my social circle who isn't in it, they're all asking me, how do I get into it? What do I do? And it's in the, it's in the zeitgeist. So it's only going to grow. It's only going to grow. Yeah.
Yeah. I mean, many people would have invested in other kinds of ETFs. And so that's a very easy thing to, onboard. How are you helping? I mean, what about like fiat on-ramps and off-ramps in the Unity wallet? How did you solve that? Because that's a massive problem for mass adoption, is how do I actually get my money into it? How do you actually, you just said, your mates are ringing asking you, how do you actually do this thing? How did you solve that with Unity?
It's definitely an issue. We've solved it in part. It's not been fully solved because obviously we're a decentralized platform. Okay. So basically we provide the framework and we bring together a bunch of third parties, so for like swaps, for example, we have 4 partners, 1inch, Jupiter, Changely, Let's Exchange. So we can offer users the best pricing options, right, for swaps. And then we use a partner called Ramp, it's a global company. And Ramp, you can on-ramp and you can off-ramp. And for those, I don't know if your users are comfortable with this terminology, but on-ramp obviously is when you use your cash to buy crypto, and off-ramp is when you sell your crypto into cash and then get it back into your bank account. So we use a partner called Ramp for that. But the biggest challenge we face is when it comes to the regulatory landscape. It's a patchwork quilt. And you mentioned before, so for example, China, right? One minute they ban it, the next minute it's okay. Similar confusion maybe in the Indian market. In the European market, we now have new regulations with MiCA, markets in crypto assets. The UK are pretty strict on this as well. So when people want to on-ramp with us, depending on their jurisdiction, it's either easy or it's not. And then And no matter what platform you use, you have to do something called KYC, know your customer, which is where you have to verify your identity. And this is obviously for anti-money laundering reasons, right?
Yeah.
We personally don't want any illicit money or crypto on our platform. And we go to really big measures to make sure that's the case. But to answer the question, I think one of the things we need to do is work with multiple partners to serve multiple jurisdictions. So that's something we're probably going to look at. And then one of the things that we're the only wallet that does this, no other wallet does this. We have a product called KYT, Know Your Transaction.
Okay.
Where we work with multiple blockchain intelligence companies, where as a user, you can paste in a wallet address. So let's say you and I are going to do a transaction, a Bitcoin transaction, and you're going to send me some Bitcoin. Before you do that, you're going to give me your wallet address. I'm going to paste it into a field in Unity, and it's going to run a report. And that report will tell me if your crypto at any point has been involved in any dark web activity, if you're evading sanctions, if you've laundered money, if it's gone through a crypto mixer or whatever. And it will tell me if it's a high risk transaction. If it's high risk, I'm going to say, sorry, I can't do business with you, because what will happen is a lot of central exchanges use blockchain intelligence services too. And if they see your wallet as high risk, they'll just blacklist you. So we're doing things to make it pretty safe. But to answer the original question, the problem isn't the technology. The problem is that the regulations are a patchwork quilt. There's no, in the same way in the banking world, pretty much most nation states agree on how to handle banking, incoming money, outgoing money. We don't have that in crypto. We need a centralized framework. And because it's such a nascent industry, still, it's to be expected that it's this way, but it will improve. Yeah. So I think one of the other ways as well that users can on-ramp with us if their jurisdiction doesn't allow them to use ramp, for example, is if they have funds on a centralized exchange, they can just send them to their Unity wallet. And, that's another way. So there's more than two ways to skin a cat, as they say.
Yeah. How are you thinking about, so just thinking about that regulatory piece and, the patchwork approach, because you have to, because of all the different regulatory jurisdictions and zones, it seems to me that something like a digital identity can really help solve some of those issues. However, that might also be really against the libertarian, decentralized ethos. How are you thinking through ZK technology with regard to Unity Wallet and how that might help, customer, but seeking some ambiguity and privacy?
So obviously blockchain has like so many uses that could help in so many areas, like, getting a mortgage, getting insurance. Identity verification is one, right? Where you can use the blockchain to, you kind of go through a process, and then all you simply do is give your key and your information is verified. And that's it. And then you're accepted. But I think, so obviously crypto is semi-anonymous, right? Like you can operate your Bitcoin wallets, and people can see everything you do on the ledger, but they won't know who you are. But it's not reasonable for consumers to expect that if they want to, on-ramp 10 grand or off-ramp 10 grand, that the authorities don't have a right to know who you are, because you're going to put that money into a bank account and they need to know who you are. But I think blockchain technology could play a good role in that. I think KYC processes need to be better streamlined. On ZK Tech, I actually don't know too much about that, to be honest. I know it's like they use biometrics and some other techniques, but all I can say is I think the KYC process needs to be more streamlined, and I think people should be looking to blockchain technologies so that you have really, a universal passport which allows you to operate on the blockchain very easily without cumbersome processes.
Yeah,
But I don't know if I've answered your question.
Oh, no, yeah, I think so. Absolutely. Yeah, absolutely. Okay, back to Unity Wallet then. What are some of the things that you are most excited about for 2025?
Well, so we're seeing really good growth, which is excellent. We are seeing what's exciting is we've been enjoying quite a lot of growth in Latin America because the wallet's also available in Spanish. And there's a lot of unbanked people in South America. And so crypto represents an opportunity and a level playing field. They haven't got to worry about, credit scores or things like that. They can operate on DeFi. They can use Wallet Connect and they can do a bunch of other stuff through decentralized apps or dApps where they can, stake, they can borrow money, they can lend money, just giving access to a lot of people that are cut out of the traditional banking system. So we're excited about that. We're very excited. We have a loyalty program. I think we're one of two wallets that has a built-in loyalty program where you get rewarded just for opening the app and doing everyday transactions like sending, receiving, swapping, and then those points you can then redeem. You can basically get cash back. We have our own Unity token where we're rewarding users for that. You can reach different tiers and levels, which will then give you further discounts on transactions, give you access to those KYT risk assessment checks that I spoke about before. We're excited about new partnerships. I can't really talk too much about those, but
Sure.
We've got some new things happening. We're going to look to work with some new partners to make things even better. We're always improving the UI of the app. We're very active in marketing right now, which is having a really nice impact on our growth plans. And we're very excited about what's happening in America, right? So you've got obviously a Republican government with a very pro-crypto president with a very libertarian mindset, which I think is great because at its core, crypto it's libertarian, right? It's my money. I do what I want. You don't tell me what I do with it. It's none of your business. Stay out my business, right? That's really that. And I think so. Their approach, for example, is they're very big proponents of stable coins. They want to support USDT, USDC, whereas the conversation in Europe is around central bank digital currencies, which I think is a really bad idea because it's just a privacy nightmare for consumers, right?
Oh yeah,
You basically it's impossible. They'll know every place you get a cup of coffee. They'll know when you had your coffee, where you had it. People don't want that. And so I think the American approach is actually really good. And I think we need to follow their lead. And everything that they do is based around stimulating growth and innovation. And so we have really, really high hopes. And we hope that the regulatory impact will have a knock-on effect in other territories as well and really help growth. We're very, very pro-regulation. We need regulation, but we need sensible regulation, and we need regulators to consult with companies like us before they go ahead and make rules. And I think that's what they're doing in the US. That's the approach they're taking. So we're excited about that. In terms of the app as well, we kind of offer everything. I mean, you can buy, sell, send the proceeds back to your debit card. You can swap, over 250 different leading cryptocurrencies. You can store NFTs. You can browse NFTs. We've got a really great Wallet Connect integration across multiple blockchains. And I'm trying to think, we've got sub accounts. So you can basically have an account for savings, for investments, rainy day fund. You can have different trading strategies set up, whatever you want to do. So we feel like we're like no other wallet offers more. We have a built-in social community as well. So people, if they're going to trade together, they can have a conversation through an encrypted messenger. They can post stuff, how they feel about, what do they feel about the Bitcoin price, where do they think it's going to go. It's just everything in one wallet. And honestly, nobody else does as much as we do in a single app. So we're really proud of that. And we're very excited for 2025.
That's cool, man. Sounds like you're trying to give the user experience of something centralized, but with actually the ethos and philosophy of the more, like I said, libertarian, decentralized ethos.
Precisely that. Like, we want users to feel like they're in a centralized environment, but know that it's decentralized, that they have their privacy, they have full ownership over each of their individual crypto asset wallets. They own their private keys, and that's it. We don't know anything about what they're doing. That's all down to them, right? So, yeah.
What do you think? What's the place of cold storage or, like a Ledger or a Trezor or a Keystone? Those
like air-gapped stuff. Yeah, so I mean, there's obviously a great place for them. I think they're really popular products, right? So I think if you're going to have a spectrum, then you've got, centralized, where you have the least control and ownership, and then you have self-custodial wallets, and then hardware wallets, which are on the other end of the spectrum. Now, obviously, if you've got a wallet app like ours on your phone, it's not air-gapped, it's connected. Whereas a ledger is an offline device. However, I would say that there's really no difference between, say, a ledger or our app. One is just on a USB device and one is on a phone. But the difference is you can take your ledger device and you can put it in a safe. Someone steals it, you can also buy a new ledger and put in your recovery phrase and get everything back. The same as you can with Unity Wallet. So, my view is they are self-custodial wallet application and a ledger device. They're as safe as each other. They're one and the same. But I would say to anybody that keeps large amounts of crypto on a centralized exchange is to move it to a self-custodial device, whether it's on your iPhone, your Android, or a Ledger or a Trezor or whatever it is. Yeah.
Oh yeah, that's the one piece of advice I think that stayed exactly the same, other than StackSats. Don't keep your, not your keys, not your coins is, the wisdom that prevails.
Yeah, I mean, whenever I've bought any assets, sometimes, for example, there are some coins we haven't supported on the phone, so I've bought them on a centralized exchange, and immediately I will send them to my phone wallet immediately. I won't keep them on a central exchange, even though I think Coinbase, Kraken, perfectly fine exchanges with perfectly fine, with adequate liquidity measures in place now. I just still makes me nervous. Yeah.
Yeah, fair enough too. What about zooming out from not just the app and stuff that you're building? What are you excited about 2025 in the crypto market generally? Well, not even market, just crypto generally.
Broader adoption. Yeah, I think, well, broader adoption, but also I think there's this, what you're seeing now. So really with the ETF products, is you're seeing this convergence of TradFi and DeFi. And I think that convergence is going to keep on happening. And that's probably a good thing because, so, right now, for example, you have a situation where many banks, I'm not talking about fintech banks, talking about established banks. They don't want to touch crypto. If you off ramp and send your money to, a well-known bank, high street bank, they might freeze your money. They might have assets with it. But with this ever-growing convergence, I think TradFi and DeFi is going to become NewFi, right? In the same way, we're still calling social media. It's not. It's media, right? It's all media now. So I'm excited about the convergence. I'm excited to see what innovative products come out in the financial world. Obviously, Canada is now adopting spot ETFs. Europe stubbornly won't go there. I think they have ETNs, exchange traded notes, which is a very different product from a spot ETF. But I'm hoping that the success of these new financial instruments in North America catches on in other parts of the world, and we see more and more growing convergence, mass adoption, and that we can also see, poorer people in the world who are unbanked have access to banking services and use certain cryptocurrencies for efficient micropayments. I'm very excited about stable coins, cross-border payments. More and more people are being paid their wages with stable coins. And I think it's really exciting. Yeah, those are the things I'm most excited about. And obviously, what's happening in the US. Let's see what Trump delivers this year, rather. Yeah.
Yeah. And even, I mean, again, the hope is the best case scenario of whatever, great things happen in the States will then also mean that the people that you were talking about who are living in more of the poorer areas of the world will actually have better rails, better ecosystem to be able to, take advantage of the things that they might not have any hope to take advantage of at present or with, without it.
Yeah. But the interesting thing is, if you look at El Salvador, right, they created this wallet called Chivo, and they gave citizens a $30 credit so they could buy Bitcoin. Mm-hmm. And so the citizens, they used the $30 credit, and then they didn't buy any more Bitcoin after that. And so part of me's thinking in my head, it would be really nice if some of the Bitcoin whales out there were kind of a bit more altruistic, and we would, well, I'm not a Bitcoin whale. I'm probably like a mini dolphin. But if they would donate some of their crypto to some of these, poorest, most marginalized people in society, so they could then populate their wallets with some assets and do some investing of their own and grow their wealth this way. I think that would be a really nice thing to see. So yeah, but very interesting times.
Yeah, but man, even just giving the opportunity to people, those who see the opportunity. I mean, I know this already from experiencing or from knowing these people who have come from places that, again, the opportunity that maybe blockchain technologies generally, rather than crypto specifically, although crypto too, if I can differentiate those two things, overlapping things, obviously, people who've kind of taken the bull by the horns or taken a risk and started very, very small, but have built amazing portfolios and like radically changed their own lives, but also the lives of their communities because of what they've been able to do. I find fascinating. And like you say, you can do a thing where you buy every citizen something. That doesn't mean every citizen. I mean, it's still going to be a bell curve no matter where you go. There's going to be a bell curve of people who do something or take the opportunity, people who don't see the opportunity, people who just sit on the opportunity. But I think just being able to present the opportunity to every person in the world, I think is, will change lives of people in those places that, had they not had that opportunity, their life wouldn't be as good.
I mean, imagine if Michael Saylor or the Winklevi just gave one Bitcoin to be disseminated, amongst a small group of people in a poorer country. They could just change their lives in a second. I mean, it'd be a really great thing to do, I think. Yeah.
So, what I like to ask as we close out this conversation is, and there's a lot of things I'd like to talk about. Like, I mean, I would love to ask about chain abstraction and how you're thinking about that as well. Maybe next time we have you on. What is your most contrarian view? What is it that, everybody else is swimming downstream, but you're trying to go upstream, or everyone's looking over there, but you're looking over here?
So when you ask me this question and I answer it, I'm answering it as devil's advocate, not because I believe it.
I mean, you can answer if you believe it, or you can posit something for sure that you don't necessarily believe.
Okay, so the biggest threat to crypto is not regulation, it's apathy.
Oh, right.
That's one of my contrarian views. In the kind of sense that it's very, obviously there's so many factors, right, that go into, if you take Bitcoin, there's so many factors that go into making the price rise or fall. Regulations, geopolitics, macroeconomics. Did I say regulations already? Sentiment, right? So if something bad happens and sentiment across the board changes, that's the biggest threat to Bitcoin. It's not regulation. We saw when China totally clamped down on Bitcoin.
Yeah.
We saw the price go down, but then it shot up, right? So that didn't stop it. It's actually sentiment. And another prime example in December, Trump won the election overwhelmingly with this mandate that he never had in his first term. And he started talking about crypto. He started making administrative hires in his administration who were all very pro crypto. And the price went stratospheric.
Yeah.
So the biggest threat, again, is apathy. It's mass change in sentiment is what can kill a currency. And that's also the same with fiat currencies as well, by the way. I mean, there's obviously macroeconomic factors there as well, but it's really sentiment. Another contrarian view right now, even though there's still price swings, you could say Bitcoin is too stable to be interesting, right? A lot of people want to go for the really volatile coins because the pendulum swings are so vast that they might make even more money very quickly, like XRP, right? I'm the idiot that bought XRP at $3.23 5 years ago, and then it stayed at 50 cents for like half a decade.
I sold on mine at 33 cents. Did it again.
And then another one, Web3 is just Web 2.5 with better marketing.
All right. What's Web3?
That's another contrarian view. Well, so I mean, obviously, Web 1 was really internet and websites. Web 2 was user-generated content. Web 3 is really about ownership and self-control. But yet, so many Web3 products rely on centralized infrastructure and technology, venture capital funding, and traditional business models. And so the promised revolution looks suspiciously more like evolution. So what I'm saying is Web3 is really kind of in between 2 and 3.
Yeah, so it's an iteration. The promise is there, but hasn't delivered yet.
Yes. Yeah. But I'm not saying I believe all these things. I do believe the one on empathy. I think that's like, that's like one of the biggest risks. Yeah.
Oh yeah, man. Even within the crypto kind of world, you see something like Trump coin comes along, sucks all the liquidity because it gets all the attention, and then other coins, and even it risked the stability of the very chain that launched on. Like it almost toppled its own chain. And so within
Solana,
Solana,
yeah.
So you see it within crypto, but then obviously you'd see that as crypto as well. So if crypto, as soon as AI became, hit the meta, seemed like all of the attention kind of zoomed over there until Bitcoin started to go on a rise and, hit the 100K mark again. So man, attention is massive.
The Trump coin's gone from 73 down to $17 or something. It's lost 108% value since the inauguration. I feel bad for some people, but it is what it is.
Oh boy. Yeah. Hey, James, really, really great to chat with you today. If someone wants to find out more about Unity Wallet, about what you're building, or hear from you, where can they find you online?
Yeah, so the website is unitywallet.com. We're on X, Unity_official, Unity_wallet. Got to get that right. It's one of those two. I should know this.
We'll check it and put it in the show notes.
Thank you. And then me personally, I'm at James Toledano. And my last name is Toledano.
What kind of stuff are you tweeting about?
Tweeting about, it's all about Unity Wallet. It's all about the pricing. It's all about press releases. I've been in Forbes a couple of times recently, which was really exciting for me personally.
Nice one.
To kind of put those there. And then one tweet was a complaint about British Airways, but otherwise it's all crypto.
All right. Well, thank you so much for joining us, James. Really excited to see how Unity Wallet grows this year and really fulfills some of those promises of Web3.
Yeah, thanks for having me on. Really appreciate it. I really enjoyed it.
Thank you for joining us on the show today. Hope you enjoyed this episode of Off Chain. We love bringing you great guests like James and hope we've inspired you to learn more about Web3, about technology, thinking about the future, and how you might be a part of building it. As always, please like, subscribe, or better yet, share this episode with a friend and help us spread the word. And join us again next week for another exciting episode of Off Chain. Till then, take care.